Hi guys, I just did a bloody 7-minute video, which isn't too long, but I have to do this over again. I had the wrong bloody microphone plugged in. So, anyways, still looking for 91.75 on the dollar, and then possible further downside into 91s, 90 below 91.50. Bang, hit all this level, and then over here I'll be taking my profits. Well, I'll just be on the sidelines for a while to see what happens. Probably start filling some imbalance to the upside. So I'm hoping they make a big move, consolidate here, back up, and then longer term down again into the 88s. So that's long term now. So if we go down to a daily, I'll show you a couple things here. So my target this week was to go for 91.75 and then possible 91.50s. So what happened this week? So Monday traded. Let me take you to an hourly quickly. Monday traded. We made a high at this level. Now I was asking myself why this level. There's a breaker here, but we hit that. We went in there. It's also Monday, so there's a lot of manipulation stops taken, and we hit this level. So I went to a daily. I was like, what's to the left of the chart? Why did we reject that with a massive wick like that, and then still stay under this block? What is that for? And I looked and see that gap and this gap. Look how price comes off this level there. Bang, bang. Look at the resistance here. And then there again. So see this here, it comes down, it falls in this area, it goes back up, uses that gap again as support, goes up. So obviously I didn't look at this and be like, oh, that's going to be a massive resistance level. I didn't even see that. I just looked at it now because this is where we traded on Monday and then we've broken away. I wanted the bodies to stay underneath this block because this is inefficient, and because we're bearish, I didn't want this to show any support going up. Otherwise, my whole idea for this week would be blown away. Just put that back up to 75-ish. So now we've got another one, and a possible breaker for further. So if we break below, maybe come back into this area and then use it as resistance to go down again, similar to that, and this breaker in there on the 1 hour. See, look how that goes. I like that we took Friday's high, and we just broke away. So at the moment, it's 2 hours until FOMC. It's 5 o'clock my time, and it would be nice if FOMC actually just smashes it down. It would be great. I'm currently long. I'll show you quickly. Before I show you, I'll explain quickly on here. So last week, see these lows? As DXY went up and took those highs, and we'd rejected quite quickly, the FIBRE took out these lows and then quickly rejected with the bodies like staying above. So I like that kind of wick, and then I think it's about 40 pips from the bottom to the close. Yeah, so to Asia, we consolidated up there about 40 pips away, so that's quite big. So these also took the bodies of this area here. We've left that, which is fair enough. This is just showing signs of bullishness. Order block over here. So now that we see red candles and then bullish order block, beautiful. Well, in the wick there, but on the 4 hour, it's beautiful price action. Bang. I like that we've rejected with these wicks. Came down today. Now, what I wanted to highlight today is in the New York session, because it's FOMC tonight. If you're going to start changing bias and being, because I did this last couple of weeks, I lost like $1,000 on my Trader Central account, which is this one, on a 50K account, like trading in and out, like quickly, and then like before you know it, like $1,000 is gone. So what I want to highlight is today. So if you go to like a 5-minute today, so between New York session, like look at all this. I was expecting this area, yeah, bullish order block. So we came down. Let me just start here quickly. So today, 6 o'clock. So Asian range, break up, come down into that higher time frame bullish order block there, break away. So this is a breaking structure already. So we've come back down. See this area here? Use it there as support, up. Bullish order block now, up. So now if you start changing your bias because of the choppy action, you could get hurt here. You could go short thinking, oh, close that. Now that becomes a bearish order block. Go short now. There could be a trend line here, which still could be actually. So maybe even if FOMC comes down and takes out this low now, who knows? Wouldn't be surprised in this action, but I'm holding in this market. But I'm holding my longs. I think my stop is down here somewhere. I'll show you now. So yeah, so basically this is just like a warning to say, well, be careful of getting chopped up in this market, especially with high volatile news like in 2 hours. So New York is basically just consolidating, confusing everybody. So if you got your higher time frame in mind, just leave it, let it go. If you're wrong, you're wrong. You'll take that 30 pip loss or whatever it is. So basically, this is what I've got running. So that's 30 pips with 2 positions, so 60 pips. um, my target is the weekly. There's some gaps up here, but I don't think we're going to ramp up 450 pips. Well, we might. Pound yen did it. So like, okay, 500 and something pips. This is where I had a really good week. I clocked 300 pips from there to there. So my target is sitting for today. Hopefully we get up to like 2060. Depends on FOMC or this week, and then probably next week just continue up. Now if you go back to trading view, if we go to weekly, I'll show you why those levels. See this little gap and this little gap. So I'm looking at those, looking to fill that, so 2050, and then looking to fill this one later on. And then run into, see if we can use this. So if we break through, come back into it, use it as support, and then go towards this one and fill this one. That'll be another setup, but that's latest time. I think that's it for now. So keep well, guys, and happy safe trading. Cheers. Bye bye.